Welcome everyone to the Mortgage Insiders Edition 2025, first edition, first episode in the brand new year. As you already know, myself, Preet Singh, a mortgage broker, associate with Wine Group in Alberta, and my colleague Trevor from Calgary is also a brand new face to Mortgage Insiders Edition as per our last episode. Trevor is also a mortgage associate broker with Wine Group based in Calgary. So we have plenty of new ideas in right now going through in our mind, which we would love to share with you throughout the year, or maybe January, February. But we will start with the most important one, and that is the hottest topic in the market at the moment. It is the rate environment. Many clients, realtors, builder partners, they approach us and are asking for advice, and they're looking for inside story, and that's how this episode is, Mortgage Insider Edition. They're looking for the best advice, particularly from a professional, and see where the rates would end up or start from in 2025. Considering all the environment in Canadian politics and US politics going around. So, Trevor, what's your take on that?
Well, first, Happy New Year. Yes,
Happy New Year.
MIE, first episode, 2025. Uncertainty. There's a lot, like you said, a lot of people are starting to ask the questions. The report came out that there's 1.2 million mortgages that are going to be coming up for renewal. So the hot question everybody is, do I go fixed or do I go variable?
Yeah.
What am I going to do? And so what yourself and me before, we were like, okay, well, the topics we sort of have to rearrange. I think the interest rate one is a very important topic as we head into 2025.
Yeah.
With Vine, we always have the meetings, like everybody together. Every Tuesday, we're always discussing the interest rates. And of course, we've got our own Christopher Darwich, who he's a rate genie. Has called the last two Bank of Canada announcements. So we're always in contact. And all of us brokers at Vine are asking the exact same questions so that we can advise our clients.
Absolutely.
So let's start in what are you saying to your clients right now for the fixed versus variable? They call and they say, Preet, our mortgage is coming up for renewal. What's the first thing you say? I know I say it depends. So how do you guide your clients through this navigation?
That's a very fully loaded question, actually, Trevor. And pretty much our goal is to stay upfront with our clients, know the full story about the client, what exactly are they thinking to do in the next 2 to 3 year window, and then basically guide them accordingly. So and it all depends. Is it a rental property or it's a principal residence? Are they going to flip that property? So hands down, I am a very biased person towards variable. I love the variable product. But again, I would basically, look at the whole scenario and recommend them a 3-year fix or a 2-year fix, which we have been doing in the last, let's say, 6 to 8 month window. But now things are changing, right? So now things are changing again towards, people are leaning towards variable again, and the variable it's showing its strength when you compare the 3-year interest rate going on right now on any type of purchase or refinance right now.
Yes. No, I love it. I love it that you're mentioning to your clients what's happening in the next 2 to 3 years. The banks we know are going to be heavily aggressive in putting out the 5-year, because the 5-year is the cheapest right now.
Yes.
And we've come out of that, and the 5-year wasn't the cheapest. It was the 3. So during the summertime, and even prior to the summertime, the 3-year fixed was cheaper than the 5-year fixed, which isn't in an operating normal market. That shouldn't be the case. Short-term interest rates should not be as cheap as longer term. So we saw that bond yield inversion. And so what that means is the 3-year is going to be cheaper than the 5-year.
Yes.
And when the inversion starts to happen, when the inversion corrects itself, where the 5-year is now cheaper than the 3, it's always indicative of a recession.
Mm-hmm.
So the summertime, we saw those signs. Now we're coming out of the yield inversion and we're seeing the 5-year fix cheaper than the 3.
Mm-hmm.
That means we're going to be heading into not so great economic times here in Canada, which fits what we're hearing in the news right now,
Yes.
with the uncertainty of the administration south of the border,
Mm-hmm.
with threats of tariffs, with us becoming the 51st state. Language in a political realm has direct effects on the market.
Mm-hmm.
So what we do know is slowdown in the economy, the Bank of Canada is going to have to do something. And you shared with me the forecasts that the banks are projecting in Q1 and throughout 2025. And the
Yeah.
consensus is that the Bank of Canada has room to move to the downside, which
Yes.
means they're going to be taking on average, between all the 5 banks, on average about another full percentage from prime. That
Yes.
definitely gives weight to a variable mortgage because we get further discounts from prime.
Yes.
And it's that discount where, as rates go down, clients can capitalize on the lower payments. And as things start to settle, as we get further into 2025,
Yeah.
we can talk about possibly locking in then. So it's
Yes.
kind of hedging, since we know that fixed rates have further room to come down as well. We don't necessarily want to get clients into a fixed products when we know 6 to 8 months down the road, possibly 12 months down the road, the
Mm-hmm.
interest rate's going to be lower and they're overpaying. We're not doing a client a favor.
Absolutely. Yeah.
And it comes down to, what are the client's goals? Like, what is it that they want to achieve? What's the best rate? That's that's old news. That's no longer way that brokers have to approach clients. It's
Mm-hmm.
the context of the household budget and your goals. Because we
Yeah.
don't know. We don't know what's happening. We don't know if there's a debt consolidation needed. We don't know if there's been a job loss or reduction to hours, or if there's CRA debt.
Yes.
We're getting to that time of year. We don't know if couple is currently going through the beginnings of a separation.
Mm-hmm.
And so that's going to help us advise as to, well, as you're navigating this very challenging time, what is going to be the best option, if you're going to be keeping the place or if you're going to be selling the place. There's so many questions and a conversation is needed. The
Yes.
media, that's what we're hearing. They're not saying talk to your bank. They're saying talk to everybody else, talk to other brokers,
Mm-hmm.
because the banks, with being aggressive, are simply going to give you a rate. They're going to say, here you go. There's the rate.
Mm.
Would you like it?
Yeah.
They're not going to be asking any questions for the client if that fits their lifestyle going forward. It's not that they don't care. They just don't want to ask the question because, well, this is all we can do. This is our rates. This is it.
Yeah. That's the main point, that the lenders basically are ready to give discounts also when our
Yes.
clients basically will walk into a bank through a broker or directly. Yes, they will find the rate. I agree with that, but the main key part is a professional advice. You need to basically make up a flow chart of your upcoming 3 to 4 year window and see what the goals are. Are these goals met with what you're doing today? So the rate will be a center point, definitely, but rate would not be the everything. You need a full analysis of your uh, basically lifestyle, let's say application numbers, cash flow, if you have a rental property, all these things you need to consider, and then basically make up your mind which way a fix would benefit you, a short term or long term, or a variable. And as we have multiple times explained in the past also, that variable rate always has more advantages when it comes to the penalty calculations or
Yeah.
conversion, the flexibility in a variable product, whether it's a static payment or an adjustable payment. That's a different day topic. Uh, our clients, listeners, and viewers basically need to look at all these scenarios in detail. And that's the saying we always have been in the wine group. We always say you have to basically date the rate and marry the house, right? So you basically,
Yes.
if you love the house, then if you are basically looking into the rate scenario, that rate scenario has to be well thought and well planned if it makes sense to you. Yeah.
Yes, because there's the interest that you pay, but
Hmm.
then there's the volume of interest that you pay over owning the house.
Yes.
So we're, well, I like to say to my clients, I'm going to be with you for the
Hmm.
entire amortization of the mortgage. And so I can be a tremendous pain in the butt. So we want to find a way that you guys can pay off the mortgage sooner so you
Hmm.
don't always have to get me, poking at them. Hey, what are you guys' goals? What are you guys' goals? It's
Yes.
flexibility. You nailed it there. The flexibility on the variable
Hmm.
has the edge right now while we ride or learn more about the uncertainty because it's just the start of the year. And
Yeah.
already there's so much unknowns that, well,
Yeah.
we 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 have to start the conversation as soon as possible with clients. If the
Yes.
renewal isn't until the summertime, we got to start the conversation now.
Hmm.
We have to be able to pull the trigger and talking with the existing lender, they're not going to go into as detail as, well, does this really suit your needs, because their job is just simply to retain your business,
Hmm.
and they're going to
Hmm.
do so with the interest rate. It is important, but it's not the only factor to consider.
Yeah, and they are basically, they don't have time. And no offense to that, I came from the bank world, as we discussed last in the last episode. Also, it's sometimes 9 to 5. Like I have my next client sitting on my next door window, basically knocking on the door to finish up that appointment as quickly as possible, right?
Mm,
But when you are dealing with a broker partner, a mortgage professional per se, we schedule a maximum 1 hour, 1.5 hour appointment time for our clients and give our undivided attention to our clients so that we can do a full analysis and the client, all questions are answered, right, in one single meeting, rather than we look for shortcuts and try to give you a shortcut answer like take this rate and be done with the next appointment, right? That's not the
yeah,
goal when you're dealing with a mortgage broker. So
absolutely not. I love that.
yeah, absolutely. Trevor, in the next episodes, I'm thinking we should discuss few more with this uncertainty. We should discuss about prepayment privileges, clients basically that they could enjoy. I know we are running short on this window right now, but clients should also focus on their prepayment privileges if they have funds available, how they can utilize those prepayment privileges to save on the interest costs and get mortgage
Yes.
free faster, right? So,
Yeah. Mortgage free faster. There's also discussions that throughout the year we can have on tax efficiency of the mortgage
mhm.
and ways that you can convert the bad debt into a tax deduction.
Yes.
So the Smith maneuver,
Hmm.
part of the Vine Wealth Group, this is a very powerful strategy,
Hmm.
which it doesn't necessarily negate interest rate, but the tax savings and wealth creation is absolutely beautiful. It's not for everybody, but it's an
Hmm.
option everybody should learn about.
Yeah.
As you said, prepayment options, yeah, but Valentine's. I think the Valentine's episode should all be about separation mortgage.
Hmm.
You
Hmm.
know, there's it's that time of year, which I already mentioned earlier on.
Hmm.
Um, Usually, New Year's, Christmas, New Year's, and around Valentine's Day, that's the spike of when relationships start to crumble
Falling apart.
or the increase in divorce.
Yeah.
Um, I would love to hear from our audience, sort of what would they would like to hear first, because you and I sort of
Hmm.
have a chronology of, okay, this is how we want to present the information. But if
Hmm.
there's anything that our viewers want to know right away, leave a comment and we will definitely get something recorded to
Absolutely.
address that topic, or at least get back to you, and we can start the conversation and say, okay, this was a question that was hot under your collar. Let's deal with it. But we want the feedback. I want the feedback. Preet, you want the feedback as well.
Absolutely. Absolutely.
So like
Yeah.
and subscribe and let us know, even if it's a thumbs down, thumbs up, thumbs down. Let
Yeah.
us know.
Let us know. Yes. We would always look for that feedback. And meanwhile, if you have any urging questions regarding your upcoming or ongoing mortgage application, our details, both of our details, would be on the bottom of the screen. Feel free to tag us along, a question, call us, and we would be happy to help you out. For this episode, that's pretty much end of today's session. If any questions, we would love to hear. Until next time, thank you for joining us, and we would love to see you next time. Thank you very much. Bye-bye.
See you guys later.